Let's be real. Hearing the words, "your loan is in underwriting," can send a shiver down your spine, right? It sounds like this mysterious, super complicated black box where a stranger decides your fate. You're not alone if you find it stressful. But what if I told you it doesn't have to be? Today, we're pulling back the curtain on the underwriting process. I'm going to break it down, tell you exactly what underwriters are looking for, and give you actionable tips to navigate it smoothly and boost your chances of getting that approved stamp. Stick around, because this is info you need to know. So, what in the world is underwriting? Think of it as the lender's due diligence. Whether you're applying for a mortgage, an auto loan, or even some types of insurance, underwriting is the process where the lender or insurer thoroughly vets your application to assess the risk of doing business with you. Essentially, they're asking, if we lend this person money or insure them, what are the chances they'll pay it back as agreed, or that we'll have to pay out a claim? It's all about risk assessment to protect their financial interests and yours too, by ensuring you're not taking on debt you can't handle. Okay, so what's on the underwriter's checklist? While specifics can vary, they generally focus on a few key areas, often called the 3 Cs, plus a couple of other critical factors. Credit, your financial reputation. This is huge. They'll pull your credit report from major bureaus like Experian, Equifax, or TransUnion. They're looking at your FICO score, payment history, any late payments, collections, bankruptcies, how much credit you use versus your limits, your credit utilization ratio, the age of your credit accounts, and the types of credit you've handled. Know your credit score before you apply. You can get free annual reports, dispute any errors ASAP. Capacity, your ability to repay. Can you actually afford this new debt? Underwriters scrutinize your income, pay stubs, W-2s, tax returns if you're self-employed, your employment stability, how long you've been at your job, and your existing debts, other loans, credit card balances, child support, etc. A key metric here is your debt-to-income ratio, DTI. Lenders typically like to see a DTI below 43% for mortgages, but lower is always better. Collateral, the asset securing the loan. For secured loans like mortgages, auto loans, if you're getting a loan for a house or a car, that asset acts as collateral. The underwriter needs to be sure it's worth enough to cover the loan if you default. For mortgages, this means a home appraisal will be ordered to determine the property's fair market value. Capital cash reserves, especially for big loans like mortgages, underwriters want to see you have some cash saved up, not just for the down payment and closing costs, but also as a cushion for unexpected expenses after you close. This shows financial stability. All right, let's tackle the headaches. Knowing these common pain points can save you a lot of stress. Pain point 1, the document deluge. Underwriters need a lot of paperwork. Pay stubs, W-2s, tax returns, often 2 years' worth, bank statements, all pages, IDs, and more. It can feel overwhelming. Get a checklist from your loan officer up front. Create a digital and physical folder. Scan everything clearly. Respond to requests for more info fast. The more organized you are, the smoother it goes. Think of yourself as the underwriter's best assistant. Pain point 2. The waiting game is agonizing. Underwriting takes time, a few days for simpler loans, but often several weeks for mortgages. Delays happen, especially if your file is complex or it's a busy season. Ask your loan officer for a realistic timeline. Understand that if the underwriter asks for more documents, it can extend this. Patience is key, but don't be afraid to politely ask for updates if you haven't heard anything in a while. Pain point 3, the dreaded conditional approval or request for more info. It's rare to get an instant approved with no questions. Often you'll get a conditional approval, meaning you're on the right track. But the underwriter needs a few more things, e.g. an explanation for a large deposit, updated bank statements. Don't panic, this is normal. Address each condition promptly and thoroughly. If you don't understand something, ask your loan officer to clarify. Pain point 4, fear of the big denied stamp. Rejection stings. Common reasons in the U.S. include low credit scores, high DTI, insufficient income or job stability, appraisal issues, or unverifiable information. If denied, lenders are required by law, Equal Credit Opportunity Act, to tell you why. Understand the reasons. It might be something you can fix, like paying down debt or correcting credit report errors, so you can reapply successfully in the future. Want to breeze through underwriting like a pro? Here are my top tips. Be upfront and honest. Disclose everything. Trying to hide something will likely backfire and can be considered fraud. Organize your financial life. Know where your documents are. Have explanations ready for any unusual financial activity, like large, non-payroll deposits. Don't make big financial changes. Seriously. While your loan is in underwriting, avoid changing jobs, making large purchases on credit, like a car or furniture, opening new credit cards, or making large, unexplained cash withdrawals to deposits. This can throw up red flags. Review your loan estimate, LE, carefully. For mortgages, this document outlines your loan terms. Make sure you understand it. Ask questions. Your loan officer is there to guide you. If you're unsure about anything, ask. Respond quickly. If the underwriter needs something, get it to them ASAP. Delays on your end will delay your closing. So there you have it. The underwriting process, demystified. It's a critical step designed to make sure lending is responsible for both you and the lender. By understanding what they're looking for and being prepared, you can significantly reduce stress and improve your chances of getting that loan approved. What are your biggest questions or concerns about underwriting? Have you been through it? Share your experiences and tips in the comments below. Let's help each other out. If this video was helpful, please give it a thumbs up, subscribe for more financial tips, and hit that notification bell so you don't miss our next video. Thanks for watching, and I'll see you in the next one.